Welcome to another S&P 500 analysis. This is the weekly edition. The S&P 500 moved out from the narrowest range since November 2021 and broke above the 4,200 level, but only to end the week close back below it. In this S&P 500 analysis, we'll analyze the price action of the S&P 500 and the other major market indexes, the market sentiment, market internals, and see what they are telling us on where the S&P 500 could be headed and will it make another attempt to break away from the 4,200. We'll also look at the US dollar, 10-year yield, oil, gold, and silver to see where they are headed. Finally, we'll identify some possible price action scenario for the diamond, spider, QQQ, and IWM. Then we'll analyze one of the hottest semiconductor stock that is scheduled to report its earnings next week, NVDA, and see what the market is pricing in for NVDA post-earning move. Stay tuned. Let's start with a review on how the indexes did last week. The tech-heavy NASDAQ was the strongest performer once again. It gained 3.47%, helped by the strong semiconductor sector. NVIDIA was up more than 10%, gained slightly more than $29. The Dow Jones Industrial was the worst performer. It only gained 0.38% for the week. And month to date, the NASDAQ 100 is the strongest performer, and it gained 4.21%. The Dow Jones Transportation, New York Stock Exchange Composite, and the Dow Jones Industrial are all negative for the month so far. And no surprise, year to date, the strongest performer is the NASDAQ 100 and the NASDAQ Composite. The small cap, the Russell 2000, and the Dow Jones Industrial holding less than 1% gain for the year to date. And the S&P 500 is gaining just slightly more than 9% year to date. Looking at the weekly chart of the S&P 500, we see the range is back above the 100 points. It had a range of 103 points, and it gained approximately 68 points for the week, or 1.65%. Made a weekly high of 4212.91. It did book above the 4,200 level, but it failed to close above it. It closed below it, and it also closed above the 10-week and also the 40-week moving average. Looking at the market sentiment, we see the market participant remain fearless, and the VIX is sitting at 16.81. Also, the market participant continued to be cautious. The put-call ratio is still inside of this hedge area here, and it closed on Friday at 0.83. The up-down volume ratio was relatively subdued for the week, other than the -4 and also the +4 for Tuesday and Wednesday respectively. There wasn't much selling pressure or buying pressure. Similar picture from the daily advanced decline. Did not see broad market participation in either direction other than what we saw on Tuesday and Wednesday. We did see a change in the new high versus new low. The last two trading sessions in the week, there were more new 52-week high than 52-week low. It is small, but nevertheless, it's a change. The negative divergence between the cumulative AD line and the S&P 500 is getting larger, and that is not a good sign for the bulls. The NASDAQ 100 moved up 1.74% or 236 points on Thursday, with only a 1.6 to 1 in favor of the up volume and only 357 more advancing stock than declining stock. This tells us how narrow that rally was. It was mostly due to Netflix and NVIDIA that contributed the move to the upside on that day. The NASDAQ new high, new low also flipped from more new low to more new high, although there were only 11 more new 52-week high than 52-week low, but nevertheless, it is a change. The NASDAQ 100 moved above the last August high, while the cumulative advanced decline line moved below the last October low. So that is a big red flag with this huge negative divergence. So beware. Although the market participants are not fearful, but they remain cautious. And last week's rally displayed lack of conviction from the up-down volume ratio and also the daily advanced decline. The big red flag continued to wave on the NASDAQ due to the huge negative divergence between the cumulative AD line. So don't be fooled to believe this time is different. Just because the NASDAQ keep climbing with reduced number of advancing stock doesn't mean those trailing stock will turn around and join the climb. Now let's take a look at the 10-year yield. It is moving toward this 3.75% level. I wouldn't be surprised to see it move above it and move toward this 4% level. So do not factor in a pause in the rate hike for June as yet, because Jay Powell has a different path than the market. Remember, don't fight the Fed. And the dollar is testing this 103.20 level. Watch for a move to get above this level and move toward this 105.88. The strong dollar prevented the oil from moving above the 74 level. But if it moves above 74 in the coming week, then watch for this composite point of control here near the $78 level. And if it moves below the $70 level here on this composite volume value area low, then look for this 65 area to get retested. And silver came down to this consolidation zone highlighted by the blue area. And we talked about this possible move in a previous weekly video. Now expect some chop inside of this zone before it make a directional move. And watch for this composite point of control up here at 25.30. And also this composite value area low near 22.80 as potential short-term upside and downside target respectively. Gold came down to this retracement zone we spoke about in the previous weekly video. Wait for the test of this trend line here and possibly the 50-60% retracement zone before start looking for potential setup for a bounce back up. It is currently inside of this composite value area, so be patient. Let's take a look at the daily price action for the indexes, starting with the SP 500. For the coming week, the upper range of the expected move is between 42.48 and 42.57, and the lower range is between 41.10 and 41.35. Now there is this 1x move here, this major move for this range here, and I project this thing up to 45.30. Now the potential near-term resistance will be somewhere at this pivot high near the 43.25.28, and the potential near-term support level will be down at this 40.49.35. For the coming week, we're basically watching for the S&P 500 to see would it continue to move up and possibly come up, fill this gap here, and move up to the upper range of the expected move. Now, if it come back down and get back into this range here, then we're basically looking for the lower expected move, the lower range of the expected move as potential target. And for the NASDAQ 100, the upper range for this week will be between 14,032 and 14,090. And the lower range for the week will be between 13,480 and 13,574. Notice that it almost reached this 100% major move of this symmetry move or this bull flag move. Just missed it by a little bit last week. So watch for the reversal after tagging this 100% bull flag move in the coming week. If it breaks about this 100% major move, then the target would be the upper range of the expected move. On a reversal, look for the lower range of the expected move as potential target and watch for this gap fill here. There's a low gap here and also there's a low gap down here. And the Russell 2000 is in the balance area zone here, this balance area. So be patient and watch for the gap to get filled. So if the upside gap is filled, then look for a possible move toward this 1925 level. But if the downside gap here, if this gap below here is get filled, then look for a potential move come back down to this 1700 level. And for the Dow Jones Transportation, we're basically looking at the trend line. If it break above this trend line, then target 14,500. And if it is unable to get above the trend line, then target the 13,450. And for the Dow Jones Industrial, recently came up to this trend line, got rejected, but it did find support near this gap here. So for the near term, the upside target will basically be the trend line, and the downside will be the gap fill. And for the New York Stock Exchange Composite, we're basically looking at the trend line as well. And the trend line here will basically be the resistance somewhere near the 15,500 level. And the downside target will be 14,900, this area here. Now let's take a look at some potential scenario to watch for the ETF, starting with the Diamond, the Dow Jones Industrial ETF. We see the upper range for the coming week will be between 338.50 and 339. and the lower range will be between 327.80 and 329.80. Right now, the price is sitting right in the middle of this apex here. So the resistance will basically be the weekly upper range of the weekly expected move, or this trend line here. And the support level will be down here at this level near the lower range of the expected move, which is also in confluence with this lower supporting trend line. So the upside R&R is not favorable to go try to chase this upside move. But on the downside, it's a little bit more favorable. So on the downside, if it dipped below the Friday's low, then look for a setup to target it down to this trend line and also the lower range of the expected move. And that should give somewhere around 1.6, 1.5 reward to risk ratio. And for the SPY almost filled the gap on Friday, this gap here. So just a little bit shy. So we could see a pullback in the coming week from this Friday's bearish candle. And the upper range for the coming week is between 424.40 and 425.50. But also in confluence with this gap here. And the lower range is between 410.50 and 412.90. So if the gap gets filled, then target the upper range of the expected move. But if it falls below this 416 level, then target the lower range of the expected move. And for the QQQ, the ETF for the NASDAQ 100, it almost tagged the 100% major move of this symmetry move or this bull flag move. So the lower range for the week is somewhere between 328.50 and 330.80. And the upper range is between 342.20 and 343.70. Now there's a spinning top type of close from Friday. For the coming week, it could move up to this 100% major move, then target the upper range, and also this gap here for a potential target here. This 347.87 is one of the gap here. And if it moves below the Friday's low, then target the lower range of the expected move. The Russell 2000 printed a bearish reversal candle on Friday, so if there's a follow through on the downside for the coming week, then target the lower range of the expected move, which is between 171 and 172.40. Now the upside watch is the upper range of the expected move and also this gap here. And the upper range for the week is 179.80 and 180.60. Now, before we analyze NVDA, let's do a quick go around looking at the FANG stock relative strength to the S&P 500. And by the way, if you'd like to see my analysis on these FANG stock, go visit my Substack page. I post my analysis on these stock there on a weekly basis. Go click the link in the description below. As you can see on this chart here, the New York FANG stock index, you can see the relative strength here just way outperformed the S&P 500. And you can also tell by the candlestick chart as well. And here on Apple is relatively soft in the recent week, but the price is climbing up slowly, although it is underperformed the S&P 500. And Tesla is also a little bit underperformed the S&P 500. You can see it's kind of flat, although the last few days it's trying to make a move up toward this 200 level. And Netflix in the last few days got a nice surge up, and you see this Thursday gap, and it really moved up on Thursday, and you see the relative strength just shot up. And also Meta, you can see from the October low, it's been outperformed the S&P 500 throughout this period between October and the present. And Google recently also broke out, and you can see the relative strength relative to the S&P 500 has shot up. And Amazon as well, since the early May, you can see that the relative strength on Amazon is also came up. And Microsoft as well, you can see Microsoft also shot up. And here is NVDA. You see NVDA since the beginning of the year, it's just been climbing up, and the relative strength is also showing that move. Now let's take a look at NVDA. NVDA is scheduled to report earnings on Wednesday after the market closed. Last week, NVIDIA gained over 10% or $29 a share. And year to date, it's up almost 114%. And the market is pricing in a plus or minus 7% move or plus or minus $22.30 move on post-earning. So the upper range for this week is somewhere between 335 and 343.80. And the lower range is somewhere down here at 287.50 and 290.30. Now, zooming in on NVDA, we see that it hit this 313.20 target last week, but it closed below it on Friday with a little bit of a bearish inside bar candle. So if there is a follow through on the downside, then we look for this potential gap fill here, down here near the 302 level. And if it's a negative reaction to earning, then we're basically looking for this thing to come down and break this trend line and tag into this lower range and possibly make a move toward this composite point of control down here at 275 area here. Now, if there's a positive reaction, then look for the move of coming up to this expected move and possibly even put in a new all-time high above this level at 346.47. In summary, the SP 500 moved above the 4200 level but was unable to break away from it. The market sentiment was mixed, and the market participants are not fearful, but are not totally risk-on. Although last week's range for the S&P 500 was back to normal, but the market internal showed no conviction from the market participant in favor of the upside or the downside. And the negative divergence between the AD line and the S&P 500 and also the NASDAQ 100 is increasing. That remains to be a huge red flag. And a possible catalyst to cause a violent pullback to resolve this divergence could be the failure on a debt ceiling deal and or a huge sell-off from NVDA in the semiconductor sector. And with the NASDAQ 100 up more than 26% year to date, and the NASDAQ along with Meta, both of them being up more than 100% year to date, the market is vulnerable to a major correction when these handful of mega cap tech stocks start to give back some of their gains. The recent sideways action got a lot of the talking head to believe the market is in a new accumulation stage. But if one studies closely on the market cycle and the market psychology, then one will notice some stages between the 2021 market top and the October 2022 low are missing. So don't get talked into believing this time is different. It is not different this time. Human behavior did not change. Therefore, market cycle and market psychology will not change. So be careful. The recent move is setting up for a major move away from the current level. Which direction? We'll find out soon, so be patient. Hope you find this video informative. Be sure to smash the thumbs up to give it a like and help promote this video on YouTube. If you are new to this channel and like to continue to watch these videos from me, click the subscribe. Thank you for watching and good luck on your trading.